This is Biodiagby of IPSAS Online, and in this video we'll be looking at IPSAS1, presentation of financial statements. Now IPSAS1 is one of the basic standards in IPSAS. It gives guide to general purpose financial statement prepared by entities in public sector, except for government business enterprises. Now IPSAS1 gives objective, which includes 1. Overall consideration for presentation of financial statements, the guidance for the structures of financial statements, and the minimum requirement for content of financial statements. Now, these are basically the objective of financial statement. It will also form the basis of our review, IPSAS1, in this video. And we will start by understanding the contents of financial statements. For us to understand the content of financial statements, we need to understand the purpose of financial statements. The purpose of financial statements is to provide information about an entity's financial position, financial performance, and cash flow. And this is to enable the users of financial statement make decisions and also evaluate decisions that have been taken concerning allocation of resources and accountability. Now this purpose provides a guidance for the statement to be presented by any entities. And these statements are: 1. Statement of financial position, statement of financial performance, statement of changes in net assets / equity, and cash flow statements. Now, if the entity has presented its budget to the public, it is also important that it present a comparison of budget and actual amounts. Now, this can be presented as another statement, maybe statement of budget, or as a column to be part of the statement presented above. It is also important that there are notes to the accounts. The notes to the account guides the users of financial statement on significant accounting policies and other explanatory notes which are not in any of the statements presented above. Now, this forms basically the content of financial statements. Fair financial statements, there are a lot of considerations, but IPSAS1 gives overall considerations in preparation of financial statements. First is fair presentation and compliance with IPSAS. Fair presentation and compliance with IPSAS is fulfilled when financial statement complies with IPSAS in non-material respects. The information presented is relevant, reliable, comparable, and understandable, with explicit and unreserved statements of compliance with IPSAS. Now, the key word here is compliance. However, IPSAS also noted that sometimes compliance may cause a financial statement to be misleading. And therefore, IPSAS state that if compliance will cause financial statement to be misleading, the entity have two options. 1, to comply with IPSAS. 2, to depart from it. Now, this situation arises based on the supervisory authority, regulatory authority of the entity. If the regulatory authority allows the entity to depart from IPSAS, the regulation is that the entity can depart and disclose. If the regulatory authority, on the other hand, does not allow departure, IPSAS also state that entity can comply and also disclose going concern. Financial statements shall be prepared on a going concern basis unless there is an intention to liquidate the entity or to cease operation, or there is no realistic alternative but to prepare the financial statement not as a going concern. Now, the assessment of going concern or not is usually made by officers that are responsible for preparation and approval of financial statements. If going concern is threatened, it should be disclosed. Now, sometimes the question is, when can going concern be threatened in public sector? Now, let's take for instance, there is an unrest and the public entity, a government, is unable to impose taxes on its citizen, or as we have in policies in these days, government decides to scrap an agency or a government entity, a ministry or a parastatal, meaning that the agency, ministry or parastatal ceases operation. Consistency of presentation. To help comparability and understandability, presentation of class and classification of items in financial statements shall be retained from one period onto the next. Except, however, there is a change in policy due to significant change in the nature of operation. Or 2, IPSAS requires a change. Materiality and aggregation. Each material item should be presented separately and immaterial amount should be aggregated to similar nature and function and presented separately. In other words, material items should be presented separately. However, immaterial items can be aggregated along the lines that they are similar nature or they are similar in function and presented together. Offsetting. Assets and liability, revenue and expenses shall not be offset against each other under IPSAS unless another standard allows it. Comparable information. Amount presented in financial statement shall show a comparable information in respect of previous period. Now, let's now look at the rules as set out by IPSAS1. What are the rules? 1, the rules relating to identification of financial statement, the rules relating to reporting period of financial statement, the rule relating to the timeliness of financial statement, the rules relating to responsibility for financial statement, and the rules relating to the minimum information that should be contained in any financial statement. Now, let's start with the issue related to identification of financial statements. IPSAS 1 states that financial statements shall be identified clearly and distinguished from other information in the same document. Now, for example, in this instance, the financial statement being presented is a statement of financial position, which is clearly different and is identified as being different from the statement of financial performance. IPSAS 1 also states that the name of the reporting entity should also be shown clearly. For this instance, we say the reporting entity is Federal Government of Nigeria. And it should also state whether the entity is an individual entity or is an economic entity. For example, if Federation of Nigeria is reporting on a financial statement, this will include the federal government, the 36 states and 774 local governments, the reporting date or the period the financial statement covers, the presentation currency, and the rounding amount that is being used in the preparation of the financial statement. Now let's talk of the reporting period. The reporting period, IPSAS 1 states that financial statement should be presented annually. Presentation of financial statement annually essentially means it should be presented as for 12 months. Financial statement will be presented above 12 months or below 12 months, but either way, the entity should disclose in its financial statement that is presented above or below 12 months. Now, as a way of example, let me illustrate. For a reporting period, it will be 1/1/20X1 to 31/12/20X1. This is a reporting period. But for a reporting date is 31/12/20X1. That is the reporting date, the last date of reporting. And this one takes us to the issue concerning timeliness. An entity should be in position to issue its financial statement within 6 months of reporting date. Therefore, if the reporting date, as we given in the example, is 31/12/20X1, the financial statement must be issued or be in position to issue a financial statement by 30/06/20X2. Now, let's talk of the issue concerning the responsibility for financial statements. This is one of the major questions in public sector. Who is responsible for financial statements? Now, the answer depends on region, depends on how government is formed. But to answer it properly, IPSAS gives a guidance that there's a differentiation between the officers responsible for preparation of financial statement and the officers responsible for approving and presenting financial statements. As you well know, in Nigeria, preparing financial statements squarely rests on Accountant General for the Federation, who is the Chief Accounting Officer for the Federation. And approving and presenting financial statement rests on the Honorable Minister for Finance on behalf of the President. Now let's talk of the issues relating to the minimum information that should be on financial statement. And we'll be looking at minimum information that should be on the statement of financial position, the statement of financial performance, statement of changes in net assets to equity, and the cash flow statement. Statement of financial position. Now, the statement of financial position is a snapshot of the financial state of an entity at any point in time. IPSAS says that as a minimum, the statement of financial position should include the line item that presents amount for the following: assets, property, plant and equity, investment property, intangible assets, financial assets, investment accounted for using equity method, inventories, recoverables from non-exchange transactions, taxes and transfers, receivables from exchange transactions, cash and cash equivalents, and in liability and equity, taxes and transfer payable, payable under exchange transactions, provisions, financial liabilities, minority interest presented within the net assets to equity, and the net asset to equity attributable to owner of controlling entity. Now, the statement of financial performance. The statement of financial performance shows financial performance during an accounting period. IPSAS says that as a minimum, the statement of financial performance must show the following: revenue, finance costs, share of surplus of deficit of associate and joint venture accounted for using equity method, pre-tax gain and loss recognized on disposal of asset or settlement of liability, and the surplus. Now, to further help in understanding financial performance, entity will also present statement of changes in net equities to assets. This shows capital that has been invested as well as profit from activities. IPSAS says that as a minimum, statement of net assets with equity must show the following: surplus or deficit for the period, each item of revenue and expenses for the period, total revenue and expenses for the period, for each component of net asset, equity, and issue relating to cash flow statement. Now, ladies and gentlemen, like I said, although cash flow statements, we are going to cover it in another video. Cash flow statements essentially shows the ability of an entity to generate cash and cash equivalent and the need of entities to unite those cash flows, or basically how it has been able to utilize those cash flows. And also, notes to the account. The notes to the account will present information about the basis of preparation of financial statement and specific accounting policy use. Disclosure of the information required by IPSAS that is not presented on the face of financial statement. It provides additional information that is not presented on the face of the financial statements. So, I hope you find this video helpful and useful. For more, you can visit passiconline.com at www.passiconline.com for your 100% online ICANN classes.